All right, hey everybody, welcome back to another episode of The Agent's Edge. My name is Ryan Polimeni. Today what I want to talk about is why taxes play such a role in case designing. And so I want to walk you through kind of a scenario of something that I just went through and why we win a lot of big cases because of the way we do tax planning. And I think that is something that you've heard me talk a lot about. So obviously it is part of my sales process. And I got to tell you, it's come a long way from when I first started, because when I first started, I was selling mortgage protection, life insurance. I knew nothing about taxes. But I was told from a very, early on in 2015, when I started kind of making my way into the financial advisory world, that you have to begin with taxes because taxes are the foundation of every financial plan. And if you're taking notes, I want you to hear that one more time. Let me say it again, because it is the one thing that I say in every single presentation that I give. Taxes are the foundation of every financial plan. Why? Because every decision that you should help your client make should be on the basis of taxes. You're selling an annuity, that should be a tax plan around there. You're selling a Roth conversion, that should be a tax plan. You're doing assets under management, what's your tax plan? You're helping somebody with Social Security planning, what's the tax plan? You're helping somebody with tax preparation, well, that's tax planning, right? You're helping someone with an estate plan, that's tax planning. You're helping someone with insurance planning, that's tax planning, because you're telling them about tax-free retirement, or you're talking about a tax-free death benefit when they die, right? So do you understand? So taxes are the foundation of every financial plan. And part of the reason why we win a lot of our really big cases, we closed one for 1.5 million this year. We're at 1.2 million on the last one we just did, and so on and so forth. The reason is because we focus on taxes. So when I'm working with a client and I'm telling them all things they need to know about a tax plan, there's a few things that you should be reviewing with them. Number one, what's their short-term tax strategy? What's their long-term tax strategy? Have they considered Roth conversions? How does the annuity that you're proposing to them help them from a tax situation? And so what I look at is I look at this thing called a foundational planning. And for me, foundational planning is helping somebody build the foundation of their income in retirement. I don't care if they're 55, I don't care if they're 45. We want to know what the foundation is going to look like, where your income source is going to come from. By the way, once we know the income sources, then we can figure out what the tax ramifications are. Is it coming from traditional? Is it coming from Social Security? Is it coming from your pension? Is it coming from W-2 wages? Are you going to be a 1099 employee? Or maybe you're going to start your own business in retirement years. What is it that's there? And let's work off of that. Now, again, when you can help somebody work those numbers, you can exude a lot of confidence in what it is that you're proposing. And once you do that and people start trusting you, then they're going to be more open to all the recommendations you make. But if you just go into an appointment trying to recommend a bunch of products, a bunch of this, a bunch of that, people aren't going to do business with you. These 1.5 million, $2 million clients we have, it wasn't a one or two stop close. Sometimes you're meeting with them 3-4 times and you're earning their business. So even on the annuity side, look, you may have to meet with somebody 2 to 3, 4 times to earn that $500,000, the $200,000 annuity you're trying to propose, whatever it is. And as you get into the asset under management world, you better believe you're working hard, if not harder, to earn that kind of business, because they need to trust you. They need to know you know what you're talking about. And who do people trust the most? They trust their tax advisor. Why? Because you live and die by taxes, and the foundation of every retirement and every financial plan is taxes. So when I'm working with my clients and I'm taking the tax approach, again, it's about what their needs are. And it's my job and it's your job to find out where the problems are. They may be in a really good position financially. And look, they may have a pension that's going to pay for, it's going to give them a good income. They may have their Social Security, it's going to give them a great income, and then all of a sudden, they don't really need a whole lot of their 401k, and they just keep pushing it off, and then what happens? Well, when you turn 72, the required minimum distribution is going to come back and kick you in the butt. And I'll give you an example. I was just working with a client, and we're talking about Roth conversions. And the reason we're talking about Roth conversions is because he had $9,000 a month in income from his pensions and Social Securities. He doesn't need income, right? The annuity play for income wasn't there. His problem is a tax problem. His problem was that he's going to have $1 million. We ran a calculator. So one thing I like doing is I do two calculators. Typically when I'm doing tax planning, I like doing a compound interest calculator because I want to say, okay, you're 65 today. You have 700,000. Let's take that 700,000 and be really conservative and say that we're only going to get 4% compound interest over the next few years until you're 72. Then I want to know what that number is, right? Because if I take it compounded and I say it's $1 million or 1.1 million, the next thing that I'm going to do is I'm going to take that number and I'm going to drop it into an RMD calculator because that's an important number. So that's long-term tax planning. Short-term tax planning is making sure that we're keeping them in the lowest tax bracket we can with all their income sources, or at least knowing what to expect from a tax perspective. Knowing, you have a disability pension. Okay, well, that's not taxable. You have this is taxable. How much of your Social Security is taxable, right? I like to run the provisional income formulas for my clients on taxes and Social Security because I want to know if I'm going to give them an accurate tax plan. I need to know how much of their Social Security is going to be taxed. And you can do it by understanding the provisional income formula to either tax at 0, 50%, 85%. So if 85% of somebody's Social Security benefits are going to be reported as a taxable income, you need to know that as to build it into their tax plan because your job is to help them determine where they're going to fall from a federal income tax perspective. And so that's part of it. Now, the RMD part is so important because, like I said, in a scenario where you have a client that has plenty of income coming in, they don't need any more income sources, but they have $1 million that's going to be a tax problem for them at 72, that's where the conversations of Roth conversions could come in. And so a lot of times we're working with these big clients. Look, these big clients already have financial advisors, most of them, but what they're not getting is tax plans. They're not getting RMD strategies. They're not getting Roth conversion strategies. The advisor is so focused on only growing their money. Why? Because think about this for a second. If you have a client has $1 million in their portfolio and you convert 100,000 of it, and you'll say that puts them into a 24% tax bracket, and they now lose 24% to taxes. Guess why a lot of advisors don't like doing it? Because now they're losing their fee on $24,000 that they missed out on because they're selfish and greedy. We don't operate like that. We operate differently. Look, if we're managing less, sucks for us, but don't worry because over the next few years, we're going to make up for the numbers that we lost in taxes in growth in the market. So I don't care. I'm in this thing for the long term. A lot of advisors are in this for the short term, which is why they don't do Roth conversions because all they care about is the total assets under management. Because if they lose $50, $60, $100,000 in taxes on the conversion, they're no longer managing that. They're no longer getting their fee. So you can either be greedy or you could be a real fiduciary and do the right thing for your clients. It's the way we operate. And so, again, tax planning is so important. What I also do and keep on my desk at all times, and again, I'm not promoting any company. This just has, Athene has a really good tax plan, tax breakdown, but I keep this on my desk. And what this shows me is married filing single, single tax. So it's got everything, all the tax brackets, got it right here. I've got Medicare payroll tax. I've got corporate tax rates here. We've got Social Security benefit tax rates, standard deduction, because that goes up every year. We've got itemized deductions. So you got clients asking you what's itemized versus what's standard deduction, deductions on a business, capital gains and dividends. How does that play a role? Deductions for charitable contributions, IRA, what's the limits, how much people can put into a Roth. Look, I don't have to know everything about taxes, but what I do is keep these sheets on my desk, and the January 1st, we print this out, and every single advisor and every single employee in my office gets a copy of this, because when we build a plan for somebody, build from the foundation of taxes. So if you don't incorporate these kind of things in your firm, and you and I are competing for a $1 million client, and I'm offering tax planning, Roth conversions, annuities, life insurance, a full-blown tax plan, Social Security plan, on and on, Medicare plan. Look, I'm going to beat you every time. And so in order for you to compete, you need to be in that kind of position of strength, okay? I want you to win your clients because you are the financial firm, the holistic planner that people are looking for. If you're in there selling an annuity and I'm selling this whole plan, I'm going to beat you every time. Be that person. Be the person in strength, okay? And if you do that, look, your clients are going to trust you. You're going to win a lot more cases. Your case size is going to go up. The average industry annuity size is about 77,000. Mine's over 200,000. The average insurance policy is about $1,000 annual premium. Mine's $3,200 in premium. Why? Because I know how to talk big cases. I know how to make things attractive to people based on taxes. So again, thanks for watching. I hope it's been helpful for you. Take the approach of taxes. You will win these big cases. I promise you that. It's what I do here every single day. I'm here in my office today because I've got a million things going on. I've got a ton of appointments, but I wanted to share a little bit with you about things you should be paying attention to, especially when it comes to building your firm. Thanks for watching. Hey, if you like this, hit the like button. Make sure to leave a comment below if this has been helpful. And don't forget to hit that subscribe button. And lastly, share this with somebody that needs to hear it, whether it's an agent that you know, part of your team. Let me be a resource for you. Thanks for watching. I'll see you on the next video.